there's a difference between answering investor questions about a deal and becoming defensive of your deal, right? Like your job as a deal maker while you're still in the search phase is you're supposed to find ways to kill the deal, which is really kind of confusing, but like that is the point of diligence, is to try to kill the deal.
Yep.
And I see searchers all the time get super, kind of just married to the deal, and they can explain away anything without proper backing. And I think that for me is a big red flag of like, oh, okay, they're not really thinking objectively anymore about this. They're just trying to make sure this deal gets done.
And so then if you're the investor, you're wondering, is this searcher desperate to find a new career via buying a business and is going to hold my capital hostage in order to do that? Or are they actually going to be disciplined in their thinking and decision making in making this a good investment? It's such a problem, especially late in somebody's search.
All right. Welcome back to The Intentional Owner. How's it going, Sam?
Morning, Kaustub.
Morning. It's early this morning. We're doing a 7:30. Well, I guess it's 7:50 Pacific time recording.
My fault.
No, you're good. The thing is, I wake up this early now anyways. It's kind of nice. The actual person you impacted, or I impacted, was Anna, because she goes to work at 8:30, and I was like, hey, I'm on the mic. This is what it's like dating a content creator.
Can I just call you an influencer now?
Yeah, exactly. What am I influencing though? What behavior?
I'm not sure. You're influencing the next generation of entrepreneurs.
That's true. Or like using Live Oak for lending purposes. It's top of mind because right after this, at 9, I'm doing a webinar with Lisa.
No kidding.
Mm-hmm.
No free ads, Kaustub. No free ads.
No free ads. Well, the thing is, Lisa's paying for ads in my newsletter, so it's not free. So I feel like she gets some extra plugs.
Look at that. Lisa's getting extra runway on TIO here.
I like to give my advertisers, more bang for their buck.
You're welcome, Lisa.
Mm-hmm.
All right.
Here's the latest though. I did. I'm creating an actual LLC finally for all of my like side activities, because it's they've become more sprawling over time.
And what
so
are
I'm
you
kind of
calling
excited about that. Okay, well, so I spent a lot of time. Me and ChatGPT riffed for a while, but I'm calling it Sunthra, which is a odd word. I know. So it's SUNTHRA, which means orange in my family's native language.
Sure.
And it's so my great grandparents all had orange farms, like orchards in India, which is kind of cool. Like it's kind of a weird thing that I ended up with a tree care business.
Wow, full circle.
Seriously, yeah. And so like I've been when I was a kid, my great grandparents were still alive, so I've been to the farm and like visited it. It's now, since they passed, it's it's gone out of the family, but it seemed like a nice callback.
And here's how we're going to bring it even more full circle.
Yeah.
We're going to close the loop here. So everybody knows I say that like people listen to this podcast, but anybody who listens to this humble podcast that we're putting out into the world knows that we're doing like an activity competition, like a summer-long tracker of activity. I really tried to avoid this topic this week because you absolutely roasted my rear end on this week's or last week's activities, but I have a reason. Just like I always have a reason.
Of course, yeah, everyone has a reason.
But the stakes are loser has to fly to the winner's city and play golf. And I had been thinking about where we're going to play when you lose and you have to fly out to Tampa.
The bold words for after this week.
Hey, look, it's like match play in golf. It doesn't matter how much you lose a hole by. That's
true.
So we're going to go play at a place called Cabot Citrus Farms, a new Cabot resort an hour north of where I live.
Sweet.
And if you want to Google it, and God, we're giving out a ton of free ads on this podcast. Lisa, you're going to have to pay soon. We're definitely calling the golf course and making them pay via free golf. Nice. Because all 12 of our listeners are going to go, solicit business or generate business for them. Do you see what the logo is for Cabot Citrus Farms?
It's an orange. It's very similar to the logo I've come up with, except mine I'm doing like a cross section and a half slice. But yeah, this is perfect.
Exactly. Full circle.
Sick. Man.
It
maybe
is sick.
maybe if I win, I'll still come out there and you just have to pay for us. I like travel.
Fine.
We'll see.
I do too. But
yeah. Anyways. Oh wow. We'll transition to a walking only golf experience throughout peak season.
It is turning into like, one of these, it's getting popular now, these destination resorts where it's full service, right? Hotel, food. It's a guy's trip destination.
Yeah. All right. Okay. I guess we'll be in summer. We won't be in peak season. We'll be in like summer season. Oh, wow. Okay. No, if we're in the second peak, October 4th to December 31st, their nicest course. Holy crap. If you're not staying if you're not staying there, it is $430 a round.
Yeah. Look, you only live once, and
exactly.
Golf means a lot to us.
Exactly. It means, okay, this makes me even more committed because now I want to win and come to Tampa and have you pay for that.
It's full circle, right? Like,
yeah, exactly. That'd be kind of sick.
So we will have our dedicated podcast assistant reach out and try and get a sponsorship from Cabot, right? Nobody likes my joke. We don't have a dedicated podcast assistant. Her name is ChatGPT.
Yeah, exactly. We needed some budget.
Oh man.
Okay, but to recap the activity competition for last week, I scored 11 points. Sam scored 0.
So just like match playing golf, I got absolutely crushed, and so I'm only down 1 week.
But what happened?
So it's funny you say this. I am going through a period this spring where time is just absolutely nowhere to be found. I actually sat down with my wife over the weekend to try and figure out where and why. And some of the guys I work with too, just to try and figure that out. First of all, let's just say it. It's just that I didn't prioritize it. Right? Because we're looking at this tracker. And by the way, Johnny is going to somehow left us some notes about how he is more fit than we are, even though he has a new...
Oh. Yeah. Which I'll share. You finish your excuses and then...
Jeez. Okay, yeah. So there are definitely excuses, right? Because like I did air squats yesterday while I was on a phone call. I'm not going to say who I was on a call with, but I was doing air squats while I was doing a work call. So like this is entirely about like, is this a priority or not? Point blank, no excuses. I slacked off. The reality also is like, to the extent I want to like layer in some excuses for the broader universe to hear. One, whenever we do SM Boot Camp, by the way, definitely a free ad behind here.
Yeah, that's true. Like the nice new podcast studio with a light up sign.
It's sick. For any of you guys listening, if you could go over to YouTube, is that where we post the videos?
Yep.
Go to YouTube. We're recording in our new podcast studio and it's nasty. So yeah, but whenever we do a SM Boot Camp live, which here we go, free ad again. It's 3 days in person in Tampa, generally once a quarter, but we're coming to a point where it's going to be even more than that. I get absolutely smoked because it's essentially like 3 days absolutely off the reservation.
Yep.
And I'm trying to stay on top of work while that's happening. So inevitably what happens is like every non-urgent thing that comes in for 3.5 days, I press snooze till next week. Right. So,
and then I show up when it's next week.
I show up on Monday morning at 8 a.m., like ready to prioritize like, important non-urgent tasks. And then my snooze emails come in at 8 a.m. on Monday morning. And I think I had 40 of them.
Oh, no.
So that was last week. So here we are. We got
Okay.
through it. The second one is my wife is potty training my 2-year-old. And my 2-year-old has a stronger will than my wife and I have combined. Let's put it that way. So anyway, sleep is not maximized right now. That's all right.
Fair enough. Well, here's what I did last week is I did one Peloton workout. So that was one of the cardios. And then I took our whole team. We had like did I tell you this? Like I agreed that if one of our guys came back from a leave of absence, I'd get a party bus.
Yeah.
So we did that on Friday and we took the party bus to laser tag. And like the laser tag was like 45 straight minutes running around, crouching, holding a gun. Everyone was just gassed and sweating through their shirts by the end.
That's awesome. How many steps did you have that day?
Well, so here's the crazy thing is that day I didn't get the 10,000. I got like 9,000. But then the next day I had to wake up, a little hungover. And then Anna and I do like a big day of like IKEA, Crate and Barrel, like all of that. So I hit my 10,000 steps on that day.
And to be clear, we're allowed to both like do a 30-minute cardio session and hit our steps in the same day, right?
Totally. Yeah. But that still only counts as one active day then.
Aha.
Right. Because we're trying to also incentivize frequency.
That's right.
So my 4 days are, I did one day that was 10,000 steps. I did 2 days of cardio that were separate. And then I played golf on Sunday. So that was 4.
Yeah. What'd you shoot?
94, which is fine. I'm really trying. My goal of this season is to break.
What's your handicap?
I thought it was 22, but I just plugged it in and it was actually 25.
Wow.
So it's pretty much on par for my handicap.
What's a recipe for smoking people, right? Is go out there as a 25, play bogey golf, and you're going to break some hearts.
Yeah, but I got to play bogey golf first.
And true. Okay. On another recording, we'll talk about the nature of your golf game.
Yeah, sounds good. We've never actually played together, have we?
No, we have not.
All right. Okay, well, that'll get fixed by the end of this activity competition.
It will. Just so everybody knows, Kaustub is in Seattle and I'm in Tampa. And there is a direct flight between those cities. Do you also want to know a new piece of random and useless information?
Sure.
I found out this week that my uncle went to high school with the Pope.
Are you really?
Yeah.
Like in Chicago?
Yeah, correct. So I think my uncle's going to get to meet the Pope.
That's pretty cool. Were they like friends?
Yeah.
Wow.
Like call it, like tier 2 friends.
Does it feel like it like cheapens the papacy? I don't know how you say that. To have just like an American Pope from Chicago, like it doesn't feel as like mysterious.
You're right. It doesn't. God, how much of the world is probably thinking right now, you got to be kidding me.
Yeah, it's like that's what the Americans needed is also a Pope. I was just in Chicago for a bachelor party. It was just the first time I'd really hung out there. Really fun city. I had no idea.
Yeah, well, you also went in a time of year that's bearable. So, yes.
That's true. This is true. Oh, by the way, so Johnny's idea for the activity competition, which we can, if you want to add this or not, is we should get points for how many days in the week we actually eat dinner, like make dinner, as opposed to order takeout.
Ooh. Okay, let's add it.
Is that something you struggle with?
No, because when you say make dinner, do I have to make it?
Oh, that's because your wife will make dinner.
My wife will make dinner, or we have our nanny who's been with us for 7 years. On days she's there, she makes dinner, but I don't do takeout. So
we're not putting this in. That's unfair.
Why is that unfair?
Because I have to actually Anna obviously will sometimes make it too, but this is brand new. We have no nanny in the mix to cook dinner.
I have 3 children, one of which is daily peeing on herself and us.
I guess that is fair. Okay, fine. How about we do this then? How do we weight this? How about we said it's 1 point if you have more than 4 dinners homemade in a week.
Okay. Fine.
Otherwise, it's too like big of a swing.
Unless I'm on vacation or traveling for work, I'm always going to get a point. So please do add that.
I will not. This is a sort of this is a gibby for you.
Thank you. Anybody who wants to join us in this competition is welcome to, like we talked about next week. I can even go ahead and start making you tea time. All right. So today, we're 15 minutes in. We're finally getting to like the topic at hand.
Good.
Is one that is probably a larger issue for most both searchers and owners than they want to admit. I think it's a second thought, or even like a don't give any thought to it issue, and that is managing investors. So, SM Bootcamp, so we're generally seeing like 100 people come through a year. And it's one of those things where nobody really asks, nobody raises their hand, nobody affirmatively asks the question around how do we raise money? How do we communicate with investors? What is it like to have them? Is the trade-off worth it? Do I want passive versus active? All these questions. And yet when we go to the section on day 3, where we have, essentially an hour, it used to be an hour of all things raising equity. That is now almost 2 hours because we've had so many questions over the years come up. And so maybe I'll lead it with, can you just tell us what your situation is regarding investors?
Yeah. And we've talked about in the past, how to decide between taking investors or not. And so I'm curious to like dig more and more into the like, if you've taken investors, how do you do it well? Because I think I've heard from investors that there's a wide range of searcher operators in terms of like inequality of managing investors. But so for context, so I have about 12 investors. They are a mix of, everyone is somebody I knew prior to Search World, or rather prior to my deal. And about half of them are kind of from my finance career, personal friends / peers / boss. And then about half of them are from the search world in the form of small business owners, people like you. At that time, there weren't any of the like funds doing self-funded search as far as I knew, or they were in their infancy. So it didn't quite work out to have one of those come in because they also need to write bigger checks. And so everyone is sort of an individual investor.
All right. So before I forget to poke on that one, if the funds, meaning, pools of capital that their job is to write checks, if those had existed, would you have considered having them in your cap table?
If I needed a larger equity amount, for sure, right? Like I like the guys who are running those funds, like, whether it's Tony or Ben or whoever else. I think they're smart dudes and good investors. But I think for me, it was a small enough equity check that if you can get away with only individuals, the benefit of that is you don't have any kind of fund life issue to deal with, which isn't like a huge problem, but because I think there's ways to manage around that, but it is like an incremental thing to manage. And then the only other thought is a quote, like a downside, I suppose, to having like a more professional investor, or at least one that is, investing other people's money, is like they have a responsibility to their investors too, right? To be that much sharper, that much more on it, which has pros and cons as the operator, right? In terms of passive investors versus more active investors.
So do you think, so one of the reasons why pro and con of taking money from a mini fund like this is, on the pro side, they probably require discipline. So to the extent that's going to be an issue for you, I think not you, but, somebody listening, I think there's probably a net, a positive to, if you have any concerns about what am I supposed to be doing? What is normal? What are my peers experiencing? How often should I report? I actually think anyone who has any question in that realm should take money from those funds, because right now the the huge mistake I'm seeing, and it's not through SM Bootcamp alumni who close and have money from investors. It's other deals I'm either in or I hear about where they have absolutely no discipline when it comes to like monthly financial reporting, monthly or quarterly KPI packages. And I think it reflects somewhat of a problem where searchers think when they're raising equity that they're giving away ownership, and it's almost like a mental hurdle they need to get over, that in many ways you don't know what you're doing and you need to overshare, over communicate, like over report, because it instills the kind of discipline in your operating that will make you a better owner. It'll make your business a better business.
100%. And I think one of the ways I think about it is, as the CEO of a business or the owner of a business, one of your primary responsibilities is to lower your cost of capital over time.
Yeah.
Right? Like that is, from a like theoretical finance standpoint, that is how you increase the multiple of a business, right? Is you lower its cost of capital. And the way you present yourself to your existing investors, to prospective investors, the way you kind of act as a disciplined operator, like that is all part and parcel of lowering your cost of capital over time.
Another question is passive versus active investors, and then maybe like check size.
Yeah. I mean, well, so by the way, this is kind of a random thought, but one of the things I'm going to do soon, part of why I'm starting this Santra LLC, like a real entity, is I'm going to play around, do some beta testing around doing like syndicate funds. And so this is all top of mind for me, actually, because it's a little bit of like, how would I want to be as an investor if I was writing a larger check size and representing other people's money in a syndicate. And basically a syndicate fund is just sort of like, you know, deal by deal SPVs where I raise money behind me to invest into a deal. But for that math to make sense with, you know, the legal costs and compliance costs of an SPV, we need to write a minimum check of like $250K. And so that's pretty big for self-funded search.
It's huge.
And it's really large, right? And so like I'd need to really look at larger search deals or traditional search deals in that sense. And so then it turns into the question of like, what am I bringing to the table as a large investor? And so I'm getting to think about it from both sides, as the operator and as the searcher. Oh, sorry, operator and the investor.
Yeah. And to be clear, like just so everybody tracks, no beneficial owner on a cap table. So like an LLC can come in and own 40% and not trigger the SBA guarantee threshold, but they don't care about the LLC being a 40%er. They care about the beneficial owners of the LLC. How much do they own? Right. And so this has always been the issue with trying to put equity to work in our world of self-funded ETA. If you're going to build a business around it, you need to write big checks, $200,000, $400,000, $600,000. But when there's an equity raise of $600,000 and, you know, some sort of step up is given, the check sizes are just hard to get to be big enough.
And for me, I think part of what I've thought about is it's a hard asset class to build a fund business in. And so what I would rather do is not build a fund business and like have that be more of a personal interest kind of side activity that can generate a good outcome for me and others and the searcher. But like, it can't be my number one activity, which like Bluma continues to be my number one activity and will be for the foreseeable future. And so this seems like a way for me to participate in search investing in a way that is both fun, but a little bit more meaningful than like, you know, I've been writing sort of like 10 to 15K checks personally, and I'm sort of tapped out on that personal liquidity to do those types of deals.
Yep.
But I really enjoy working with searchers as an investor, especially when the searchers are good to work with.
All right. What does good to work with mean?
I think one is searchers who are able to take on feedback and advice without immediately like thinking of the answer. That's just like being a good listener, right? And which isn't to say that like I have all these like amazing ideas that they need to listen to. That's not what I mean. But I think like I just trust searchers or trust anybody more who I think can like listen well and incorporate thoughts into their own framework. And that just makes it a more enjoyable. Like for me, it's not even necessarily like how good are they at it, but it's almost like, is it enjoyable for us to work together?
Yeah. But say more, because I think a lot of of our listeners who haven't closed yet, or maybe even if they have, are probably wondering, all right, but like, I really want to know what differentiates me as a good operator to back, a good searcher, a good owner in the eyes of an investor. And let's put aside performance of the business.
Right. I think so. I mean, defensiveness is a big one, right? Like, do you start to become defensive of your deal? There's a difference between being defensive of, or how do I say this? There's a difference between being answering investor questions about a deal and becoming defensive of your deal, right? Like, your job as a deal maker while you're still in the search phase is you're supposed to find ways to kill the deal, which is really kind of confusing, but like that is the point of diligence, is to try to kill the deal.
Yep.
And I see searchers all the time get super, kind of just married to the deal, and they can explain away anything without proper backing. And I think that for me is a big red flag of like, oh, okay, they're not really thinking objectively anymore about this. They're just trying to make sure this deal gets done. And so that's a combination. I mean, look, like everyone's guilty of this to some extent, right? There's things I kind of explained over as well. Like every searcher does that. But I think that at some point there's a spectrum to it, and at some point it becomes more and more like, okay, like you're putting on your like, I just want to buy a business hat, and you've taken off your like, is this a good deal hat?
And so then if you're the investor, you're wondering, is this searcher desperate to find a new career via buying a business, and is going to hold my capital hostage in order to do that? Or are they actually going to be disciplined in their thinking and decision-making in making this a good investment? It's such a problem, especially late in somebody's search. Late, correct, meaning they've been doing it a while.
The problem with getting into a bad deal, like obviously the money is an issue, right? Like you might lose your money on the deal. Yeah. But I also think like, I saw this in private equity, right? Where if a deal partner made a bad deal, they have this like negative cycle that then happens because it takes up more of their time to manage the bad deal. Yeah. And whereas like the other deal partners, they're able to spend their time prospecting new deals because their good deals are just sort of running themselves. And so you start to see this dynamic where private equity, like junior partners in PE, if you make one or two bad early deals, you just like never get the traction to really kill it as a partner. And so there's a real time suck to it, right? So like, and obviously here it's a little bit different because I'm not like a majority investor. I'm not like the primary investor managing a search deal, but there is an element of, if a deal goes sideways, like I will spend more of my time on that deal than on my deals that go well, right? And that crowds out my ability to do other good deals or even my own business.
It's a really good point. Didn't think of that.
And it sucks for the searcher, obviously, right? That's like their life. It's just an unpleasant experience all around.
Okay, so a new criteria or a new thought would be, a lot of searchers who come through boot camp will say, this is super tactical, but I just want you to get your like philosophy on recording here. They will ask, as we're going through the financial model, they'll and we are modeling like the cash flow waterfall to the equity investors. They'll say, the question will be, okay, once I return the equity dollars to because we're assuming the investors come in with participating preferred equity, meaning they invest their dollars, it's a senior security to the common stock owner, which is usually the searcher, and they get some sort of like pref rate on it. What they will ask is typically, okay, once I have returned their investment and the pref that they have earned on it, the quote interest component. I tried to do air quotes there for everybody on the podcast.
Right.
So then they no longer receive any proceeds after that, right? And it's this like fundamental misunderstanding that investors are investing in order to own a portion of the excess cash flow forever.
Correct.
And so maybe there is no comment here. It's more of we're trying to share with as many searchers as we can. Like the whole point of having investors is they are taking the most risk with us because they sit underneath a pile of SBA leverage.
Correct.
And like when you were in private equity, did you ever put 90% leverage on a platform? Ever? Don't answer that question.
No, Sam, of course not.
Jesus. Okay. Well, let's put it this
I get
way.
your point. Yeah, but the main point, right, is that like the cost of capital of that last 10% of the cap table is not a 10% pref, right?
Correct.
Like that is not what that money costs you. The 10% pref allows the actual amount of common equity you give away to be lower than it otherwise would be. That's it, right? Like and like the right way, like I think about the preferred equity is it's effectively like subordinated debt that is way off market because like you could never go to a lender and get 10% interest and get them to fund your last 10% of your deal. And so it's just like it's a way to lower your cost of capital in this sort of like funky structured way.
If you didn't have that pref, that 10% return to investors before the common equity, you can take a distribution, then my guess is what they would demand is a far greater step up, or just said another way, a much bigger piece of the pie of the ownership, which
Totally.
would increase your cost of capital as the searcher, meaningfully. So,
Exactly.
all right, so then let's switch gears. I think we hopefully understand that component. How do you think about liquidity rights for both the searcher to call and the seller, the investor, to put it back to the searcher? And now that you wear sort of both hats as a searcher and an investor, what's your take on it?
I think a call right which means, the searcher can force the investors to sell to them, right? Like the searcher has the right to buy the investor's shares. I would never agree to that as an investor because to me, like that's a one-sided issue, right? Where like all of my good deals I get bought out of, all of my bad deals I get stuck with, and that's just like that breaks kind of the convexity of your performance.
And so then flip it around. You're the searcher, you're the owner.
Yep.
So how do you think about your ability to, at some point, if you choose to want to own the whole business of Bluma, how do you approach it without like some sort of contractual right to buy us, the investors, out?
So I think that it depends on what kind of transfer restrictions you put into the deal, right? And I don't recall exactly what's in my deal, but the rough way I remember it is that my investors have the right to sell their shares to anyone, but they have everyone else who owns shares in Bluma or the company itself has sort of right of first refusal on it, right? So if they go out and they find a willing buyer, we get the right to be like, actually, we'll buy at that price. That way the shares stay, internally held.
Yep.
But if no one is willing to do that, like they have the right to sell their shares externally. And so it would be tough, right? It's a really small business. You have no real control rights. It's illiquid. But when we say something is illiquid, it doesn't mean it's like literally like you can never sell it. It just liquidity is really hard to come by.
Yep.
So to me, like as long as the transfer rights are reasonable, like part of the thing of getting into an illiquid deal is like it's pretty illiquid.
So all the way back to the original, like, do you see and how do you think about put rights and call rights? The only time I've ever seen them is when they exist together, which is where, and usually the way it starts is one side, typically the investor. This was back in the old days when there was less of like an understood market for governance terms.
Right.
So somebody new to this self-funded ETA community would say, well, this is great. I'm happy to do it. I can't believe you're still going to own like 75% of the business.
Right.
So like and I'm 65 years old, says the investor. I'm not really doing this to hand it away at my death. Like I need at some point to know I can turn this to cash. And so my own experience on the first business where I raised money from investors was I had a mentor of mine say, yep, I'm happy to support you. I just need a put right. And I said, oh boy. And that was new to me, trying to figure out how to deal with that as the buyer, the sponsor.
Right.
And so long story short, the negotiation of the put call and then the mechanics, right? Because ultimately it will come down to, I'm not necessarily fundamentally against, I say I, as a searcher, as the SMB owner, I don't think I'm fundamentally against somebody having the ability to sell it back to me.
Mm-hmm.
What's really hard is the valuation discussion,
Mm-hmm. Mm-hmm.
because what's the problems you could get into are if the business deteriorates and yet you have to pay an elevated valuation on that put, or even if you were able to find out like a mechanical formulaic way to determine valuation, hire some bogus third-party appraiser and yada, yada, yada. Well,
Yep.
then you also have to have the liquidity to buy it. So
Right.
then
How do you finance that? Yep.
how do you finance it? And if you get yourself in a spot where like you don't have good liquidity, your business is deteriorated, it doesn't matter. You're not going to use your line of credit. You're not. Sometimes like a seller will be forced to hold a note on a put right, but even then your investor says, well, wait a minute, I'm going to sell it back to you, but then I'm going to finance the buyout over 4 or 5 years. That's insane.
Oh, actually, I hadn't even thought of it. I kind of like that.
So that's where I've tried to go there. But then you say to your investor, okay, just hold a note over 5 years so I can actually afford the cash drain to buy you out. Well, then they're like, well, why would I do that?
I might as well
just keep owning it. And this is why all the way back to square one, I have never been involved in a SMB deal where there was a put call right.
That's interesting. I wonder. Yeah, I'm trying to think if there's a smart way. I mean, is it Chenmark that makes a market for their internal shares? Is it right? Do you know how that works? They've talked about it publicly.
Yeah, and they did it at SM Bash this year because I remember I was up there with Palmer and he mentioned that fact. So just to give a little bit of background, Chenmark, who's like maybe the OG of permanent holding vehicles in this space, they incentivize anybody who owns their equity, which is primarily their operators, with the ability to buy and sell Chenmark holding company equity at predetermined windows of liquidity every year. So your question, it's so cool. I don't know the details.
Right. And so
like, how do they create the price? How do they create the liquidity?
They've hit a scale, right, where like they have enough internal sellers and buyers that they can actually kind of make a market, I think, which would be really tough for a one-off searcher to do with their like 7 investors or 12 investors. But like I've had this thought of, okay, I would love whether, I don't know, maybe at like the 5-year mark of Bluma, right, to go to all of my investors and say, hey, you can submit I would buy at price and I would sell at price, right? Like a bid-ask spread.
Yeah.
And everyone can submit those and we find a clearing price and people who want to sell can sell to people who want to buy and vice versa and let it clear. And we could do that annually or every couple of years or something like that. Like I don't anticipate selling Bluma for a while, right? And so like that is a easy way, like outside of cash flow distributions, to create liquidity while holding the ownership with the people who really want to own it still.
It's kind of cool. I mean, I think
my like finance nerd, the finance nerd side of me, like I'm going to spend so much time like researching different auction styles to figure out the right way to do it.
So long as you're not doing air squats while you do your homework, then I'm fine with that.
Yeah, exactly. That'll be when I call the guys on our cap table who are currently in PE. That's when I'll reach out to them and be like, hey guys, it's time to make a market. Let's talk about the right mechanic.
It's so neat. All right, so let's move on so we can cover it all. Next question would be, so you've said it a number of times, how many investors you have, just as a reference point. In maybe 2 of the businesses I've talked publicly about, the dumpster business that it was our first self-funded search acquisition. We also had a dozen. So a dozen, and they were all generally of the same amount. I would say like $25,000 to $50,000 average check size. And then the most recent business that we've talked about, the fencing company, in the first phase before we recapitalized with a private equity partner, we had more like 24 people in the cap table, but vastly different check sizes. So some
Right.
very, very big, some very, very small. So then inevitably the question that a searcher has, or I guess that we're trying to suggest being intentional about, is what is the right check size? Is there a downside or an upside to lots of small checks, maybe a couple huge ones? And that tends to then get to, is there a pro or a con to having active, presumably active in a helpful way, investors versus just a bunch of silent investors?
I mean, during the deal process, what I have seen now is that if there's one or two large investors, they generally lead the charge on negotiating the operating agreement with the searcher,
Right.
which as a small investor is actually pretty helpful, right? Because I would like somebody to be looking at it, but I don't have the time to do that, right? And so it's kind of nice to know if like, okay, like whether Tony's fund or Ben's fund or whoever, like if they're over there negotiating, I'm like, okay, like the basics are probably getting covered then, and I'm good to go. So there's a little bit of a free rider thing happening there. From the searcher perspective, I mean, when I did my operating agreement, like I don't think anyone gave me any comments. Like I put together what I thought was a pretty fair operating agreement, and everyone just signed it. So that there is a benefit to that, I suppose. Like in terms of you just don't get any pushback if you just have a lot of relatively even small checks. But you kind of need to know what's market, right? Like in that scenario. You don't want to put anything egregious in there, even by accident, because it'll pretty quickly erode trust or kind of break the kind of internal bond.
I think that's right. I think my own experience is that helpfulness, or maybe call it like activeness, whatever the word is that I'm not remembering because my daughter was up for 2 hours last night. That does not correlate with check size in my own experience.
Correct.
So if you think somebody's writing a big check and therefore you're going to get more helpful advice from them, that is a bad assumption, and you need to have that be a conversation.
Mm-hmm. Yeah, it seems completely unrelated to me, right? Like, because the problem is in self-funded search, a big check is still a pretty small check for that person's overall net worth. So I mean, that may not always be true. I think maybe with the funds, it feels different, but like the deal just isn't that important to anybody on a financial standpoint. If like, and you don't want it to be, right? You don't want investors that are writing their like last 25K in savings into your, I mean, they probably wouldn't be accredited anyways. And so really like you're looking for people that just have a personal interest in being helpful and active. The financial and like them having a vested interest is a good kind of like psychological impact, but I don't think the delta between a small check and a large check is meaningfully changing their ability or interest in being helpful.
Agree. And what I do think moves that needle is a frank conversation with that potential investor around, it depends on like kind of what you want, right? You should probably lead with, hey, just to confirm, like this is sort of how I'm going to communicate. This is the cadence of it, or how often I'm going to communicate. Like, and if you don't really want more than that, you're kind of hoping for silent. I think the question would be, are you looking for anything more than that? And if the answer is no, I think it's fair to assume that that's going to be a fairly hands-off person. On the contrary, like if you're trying to guide to getting more help, I think same start, but like, and can I, count on maybe an hour a month or an hour a quarter of one-on-one time with you where you can kind of give me some additional, very straightforward advice.
I agree. What is your style? Because you like roughly how many deals are you in now? Do you have it? Do you even know?
Yeah, I do. I actually went and had to count these recently because of tax season. So in the entity chart, I'm getting north of 36 entities, but that's because like one business accounts for like 25% of those. So fair. I have about 24 separate SMB investments.
Okay. And is it a relatively passive on all of them, or are there a couple that you're more active in, or how does that look?
Yeah, and I actually have, every year I go through it, I just remind myself, like, what have I committed to here? And
Right.
almost all of them, and it aligns with the way I'm trying to approach time, is almost all of them are I am completely passive. I'm happy to chat, but to be transparent, I'm going to resist really stepping up if others haven't also, who have already committed to being helpful. So I really want to be a passive investor in most of my investments,
Right.
because what that does is it's almost like you can't promise to be highly active, because that'll eventually bleed into your Bluma time, and that's your main show.
Totally.
Well, I have a main
Yeah,
show
I think,
too. I have to
yeah.
preserve space for that.
Yeah. My message to searchers is like, as opposed to like, I don't want to be on like a board for the most part. Like, I
Yeah.
don't want to commit a specific amount of time per month or per quarter, but it's more of like, hey, like when you have a high leverage moment, like I can get on the phone within a day, and like I can make time and we can get
Yeah.
into a full discussion on it. Like, I think that's the benefit I have as a business owner is like I can create time for important stuff. And so if there is a high leverage moment, I really do want to be an advisor or like a partner to the searcher, because that part I actually find pretty fun and interesting also. And I think it just makes for good learning all around. So I've gotten to do that with a couple of the folks I'm invested in. Is like we maybe won't talk for 5 months, but then like, hey, there's a potential add-on to look at. Can we talk through it really quick? Like that's great. That to me is a really fun use of time.
And so are you a board member at that point, or are you just an informal advisor who happens to have an investment?
Informal advisor.
And do you ever see boards? Like, would you join one?
I have one deal that I'm in, I think, that has a formal board. Um, no, honestly, like I've been on boards, like it's not that interesting. I don't know. Like there's something about like, I like to like talk about businesses. A well-run board is not actually like talking about the business that much. It's sort of just like chugging through governance and doing, what like the CEO is presenting. I don't know. It's just like that the like board part of it is less interesting to me than the actual like underlying business problem or strategy issue you're dealing with.
Agree. And to differentiate our community versus like private equity, for example, I think in the private equity context, they all have formal boards. Governance is incredibly formal, and
Mm-hmm.
those boards do serve a role, because in many ways, the board, who's the the sponsor, who's the control owner, is not who's running the business. So it is like a very clear way to make sure everybody shares, generally speaking, the same information on a recurring basis.
Yeah.
Whereas here it's very different too. The searcher has, let me make sure I'm thinking about this right. So in most operating agreements, the searcher has like unanimous, unhinged control to make
Yep.
decisions over the business.
Correct.
And so what I'm finding is joining boards as a LP or as a minority shareholder, it doesn't do anything for your governance, right? You don't get anything more. You're not compensated for it generally. And the searcher can still do whatever the heck they want. And so as an investor, like I just don't see there being any upside to being on the board. And there's downside. You're committing the time, you have like
Some
liability.
liability.
Yep.
Yep.
So I think
Well,
that
actually, so
goes,
here's what I would say. What I would like to do, I would like to be on the board of a company that has no single majority owner. I think that could be interesting.
like the board of a cast of 5 people each owning 20%, or
Like like a traditional search deal, right? Like there's no
got it.
single majority owner in those deals. So I assume those boards are probably more interesting, right? A self-funded search board is a little silly. I'm not sorry, I shouldn't say that. It's not silly. It's just like the searcher's going to do what they were going to do.
Yeah, hey, that's right. All right, I don't want to miss something, which is maybe the types of people who can be useful in as an investor to the searcher. So my own experience here, first of all, is I think somebody who can be a mentor to you, and so that the advice, if they're willing to offer it, is going to be more in line with it. It's, yeah, they care about your business. They care about the day-to-day operating mechanics. They really want to see you succeed. So like a personal mentor, I think can be valuable, because if they see you getting unhinged a little bit or dealing with stress in an unproductive way, they're probably going to reach out and ask questions like, how are you doing?
Mm-hmm.
I
No,
think
that's
that's
right.
actually pretty valuable.
Totally. No, I think of it as like you want somebody who's 10 to 15 years ahead of you, somebody who's like 5 to 7 ahead, somebody who's like 3 to 5 ahead, and somebody who's like 1 to 2 ahead.
And you're doing in terms of like years ahead, because they're going to have pattern recognition that is either like very helpful to you because it's like your day to day, versus they have more global macro pattern recognition and they can offer you that kind of feedback.
Yeah, and it's not age related, right? It's I mean that by experience, right?
Yep.
Like Bradley with his commercial landscaping deal, like he's I think a year older than me, but he's like 5 years ahead of me. So I kind of put him in that category. Whereas, you're probably closer to the like 10 years ahead of me category.
Okay, I follow. Last one would be, I think, if you can get an industry expert who is of a river guide type, they're so familiar with how the industry is run and the participants and what's typical. I think that can help a lot for a first timer.
Yeah,
I
think searchers need to get a lot more creative on that front, especially self-funded search. Like they need like people are down to talk about their industry. They like talking about their industry. So just digging into LinkedIn, Facebook, just cold messaging people, going through your network. Like I went through like a searcher to a friend of a father who owns a tree business somewhere, in the Carolinas. Like go find a way during diligence to talk to people who actually understand the industry.
All right, let's go to tax goal. So the reason we thought this topic was interesting is, one, Kaustub brought it up. He's creating a LLC in order to make his investments in an LLC. Let's also throw into that the question I got yesterday from a friend. A text came in from a friend that asked, I am doing some consulting on the side and some investing on the side. Should I do it personally or should I do it through an LLC? Walk me through legalities, tax considerations, you name it.
So my opinion on this is like, don't get spun around the axle and stop doing stuff because you're trying to figure out if you should have an LLC or not, right? Like my entire first set of for my blog, the paying subscriptions, my advertising, like whatever other like referral agreements and whatnot, they've all been done personally. I'm now reaching the point where like, okay, this has become a little bit of a headache. I got like 6 different 1099s. I can't write off any of my expenses because now I actually have some expenses related to that stuff.
Yep.
For this podcast even, right? Like it's now actually making sense to have a clean LLC with a bank account that I can run everything through.
Okay, so like to be clear about the upside is to the extent you can write off business expenses and are more likely to track that, like there can be some dollar savings. Mm-hmm. I think another one could be to the extent you're getting actual income passed through to it, you can the IRS will let you take a lower compensation amount than all of the income, so you can avoid payroll taxes by taking income into your LLC, but actually W-2ing yourself out of it at a lower amount. So everybody thinks there's like huge tax advantages to putting an LLC up, and there's just not.
It's just mostly pass through. Yeah, I think this falls into the category of like people should just go start making money. If they can go generate revenue, then eventually they solve the LLC problem. I don't think you need to like get that all set up perfectly up front. And then like eventually you have expenses to actually run. So like now I will do that. So yeah, like, I don't know, there's probably been like $5,000 of expenses that I've paid for personally across my different things that I haven't, that, I should have put into an account. So whatever, $5,000 times like some, like call it like 25% rate, maybe like So like 1250, I've probably lost like something like $1,200, $1,300 because I didn't set up an LLC up front. Like it's just not worth the headache. Like, and I would have had I set up the LLC 4 years ago when I started my blog, like I would have spent more than $1,200 on LLC like management stuff anyways.
And that is, just to be clear, like there is a cost, right? Every year you have to file an annual report in the state that your entity is formed, call it $150, give or take.
Yep.
You've probably got to pay your CPA to do a return, a tax return, call it another $500. So, and then there is a mental tax here to keeping all of this together.
Yep.
So,
well,
I mean,
yeah, the one caveat I would say is I do think searchers should make an LLC for their search process because there's a ton of expenses coming in a search process. Whereas I'm thinking about this more from like if you are starting something up and you're just trying to like make side gig money, like as a consultant or like as a quote unquote content creator, that just seems like overkill to me.
I agree. Your point's the right one, which is like go make a bunch of money, go do a bunch of good activities, and then find a way to structure them efficiently.
Yeah, I don't have I'm not very good at tax structuring. Admittedly, my brain does not find it interesting. Yeah. I'd rather just go make a little bit more money. It'll be okay.
Agree. All right. If you have complaints, comments, or questions, send them to Kaustub. Otherwise, have a great week, and we'll see you in a little bit.